Hello, folks, and welcome back to the Cryptex LiveWire. Today is Thursday, February 19th. Stocks basically flat to a little bit down to start the day, but I think the big story remains with oil breaking out to new highs earlier today among escalating Iran tensions. But we're going to talk about that, US dollar, Bitcoin, stocks, and more. What's next for risk assets? It's going to be the discussion for today. But Monty, good morning, sir. How you doing?
Good morning, CJ, and good morning to everyone in attendance today. Thank you so much for coming out and watching today's video. If you have any questions, please feel free to drop them in the chat, and we'll do our best to answer them before our time is up. But excited to talk about some things beyond Bitcoin today, CJ. I mean, you've been talking about oil for the last couple of weeks now, and finally we're seeing a move that's really worth talking about. So I'm excited to hear you talk about that. I just want to talk about some positioning data for Bitcoin, particularly levels of accumulation overhead that I think are going to convert to sell pressure eventually. But we'll get to that. If there's anything you would like to start off with today, please feel free to do so, my friend.
All right, we'll do. All right, so just starting out, taking a look at Bitcoin, there's really not a lot to discuss other than the bear market blues. Continues to just trade poorly, kind of in a range, nothing really too exciting going on. So I really don't have much to say in terms of Bitcoin. It basically just continues to do what it's always done in midterm election years. But what's interesting is that we've seen such a strong inverse relationship between the US dollar and Bitcoin in the average midterm election years. Clearly, this is Bitcoin's consistent downtrend throughout years like 2014, 2018, and 2022. But we've actually seen essentially the inverse in the US dollar. So what's interesting is that even though the dollar had a horrible start to the year, when we average the previous three midterm election years, this has been the dollar's performance. And as you can see, on average, it takes about 70 to 100 days to historically really begin that uptrend. And, based on some of the recent price action, as well as the positioning, the dollar is starting to look a lot more appealing. And I think that, excuse me, the chances of maybe a potential macro market cycle low here might be getting higher. When we look at the weekly chart, we have a big bullish engulfing, bullish harami at the bottom of this multi-week downtrend, still have a little bit of a, distance from the 20-day or 20-week moving average. And, a lot of times what we've seen in these historic cycles is a top in the DXY in, early pre-midterm year. Then it takes about through January, maybe to the end of February sometimes, to see that bullish cycle play out in the dollar. This is, same administration, what we saw back in, 2018. It took a while, but once the breakout in the dollar actually did come in the first half of the year, it was very strong. So something to consider and watch, being that the dollar has been so strong today. But before we move into Bitcoin, or before we move to more macro assets and more stocks and things of that sort, I'm going to pass it back to you, Monty, to discuss some of the positioning in Bitcoin. Last thing I'll say about the dollar is that the positioning data for that is very favorable as well. When you look at shorts that are stacking up in the euro, the pound, the Aussie dollar, it's creating a big market asymmetry in terms of the positioning. When you have the positioning lining up, the technicals beginning to line up, and also the cycle time frame with the US dollar, it's a pretty interesting trade, I think, right now, especially because it's so hated. Barron's just put out that article at the start of February called it was The Economist, even better. They have an even better track record with the covers. The dangerous dollar. So no one wants to touch it. So we'll see. Something interesting to consider.
Yeah, absolutely. And I mean, we've been talking about that one since the start of the calendar year as being a potential outperformer to the upside with a weak equity market. And I think we're finally starting to see those stars align and the price action really look positive from a technical perspective for the dollar. And like you mentioned, I was going to bring this up, but I think you did a great job kind of recapping it there at the end. If you look inside the basket of assets of the DXY, the positioning data in a lot of those assets looks very favorable for the dollar to move to the upside. So I think that when you have that kind of perfect storm of, it being a midterm election year, historically we have good performance. And then also from a technical perspective, you have the basket of assets within the DXY looking relatively set to reverse and, launch the DXY higher. I think that's all looking very favorable for the dollar. So glad that you brought that to our attention. But I want to talk a little bit more about some Bitcoin because I think the positioning data is pretty interesting right now. So I want to just bring this up. So taking a look at Bitcoin, like CJ said, feeling pretty heavy today. Not much to say, down about 0.5%. But what I really wanted to talk about today was some of the positioning, the realized price distribution. And this is just essentially where people accumulated and are still holding Bitcoin and what levels they did so at. So as you can see here, between 82 and 97K, we have a pretty decent amount of people speculating that price was going to reach this level, almost 600K Bitcoin at the 87K level. So a significant amount of supply being held overhead. And I think that if we dip below 60K, you're going to see this turn to capitulation and ultimately convert into sell pressure. So right now, we're kind of trapped in this range. The sell pressure has been limited, and people that bought down here are still hoping to see us move up to the moving average. And people that bought back here, still haven't sold. That's what we're seeing from this chart here, is that people that bought back in this time period right here have yet to sell and are still holding at a loss. So that's sell pressure that has yet to be realized. And I think that in due time, we will see that sell pressure realized. I think that ultimately it's going to lead to a breakdown below the 60K level. And, right now we're slowly grinding down towards this level. Volume is low. But I think that once we get towards the 60K level, you're going to see a real fight between the bears and the bulls. The bulls will try and maintain this level. But I think that given the fact that there's so much supply held overhead at a loss right now, and this isn't just from like retail speculators. This is also from large net speculators and funds as well. But on that note, we're still seeing ETF outflows continuing to lead the charge as price grinds lower. So, until we see a change in this, which I don't expect to see until the September or October of this year, you can kind of use this as a good indicator of when to buy and when to sell. We had these 3 lower highs that were a good indication that momentum was waning and that you should have sold out of this. And the same is true for the moves to the upside. Of course, we did see some pretty heavy ETF inflows and price. This was when people were expecting price to go up to 100K. So both of these things are reflecting that in this zone here between 85 and 95, there's a lot of supply being held that can convert to sell pressure. And I think it will once we dip below 60K. So from a positioning perspective, looking at the price distribution, a lot of these people that bought in here with the hopes of Bitcoin going to 100K are stuck holding the bag down here. And you have to wonder, when are these people going to capitulate? When are they going to sell? I think the answer is, sooner than you may think. So, I think if we dip below 60K, expect to see some pretty heavy sell pressure. But that's what I'm seeing right now for Bitcoin. If there's anything you'd like to add, please feel free.
Yeah, I was just going to say, when you compare the CME futures positioning on Bitcoin as well, we have a ton of large speculators who have continued to buy the dip and are likely now at a loss. And you also have large DATs, which have also bought, Saylor buying below 75. I don't know exactly what his price was recently. BMNR has been buying ETH.
Yeah.
So when you have these entities that are continuing to buy at the bottom, or at least the local bottom, and they're not really able to move price that much, it's like, who else is gonna? You're ultimately relying on retail then to come in and buy, and it's just not that favorable of a setup. I see we have one question about Bitcoin, and then I guess we'll move to oil and some other stuff. But the question is, isn't May an ideal bottoming combo because the Fed's Kashari is saying it's useless, and the CME launching 24/7 Bitcoin futures? That's what the world needs, 24/7 futures and more assets. But all kidding aside, yeah, I mean, sentiment is quite poor, but there are still believers, right? You know, I think in previous cycles, you had most of the believers get wiped out before we saw market bottoms. We're only starting to see the initial failures of certain exchanges. Block fills was one recently that halted deposit and withdrawals. So, and I also, when you look at like the historic cycles of the DXY and Bitcoin in the midterm years, I guess it would make sense to look for a potential bottom maybe in May, as early as May, but ultimately I think it's probably better to err on the side of caution in terms of waiting until October. Let's see how price reacts if it does get to these levels. But one chart I will share, it might take me a second to bring it up, but essentially, you know, if you look at the average performance in stocks in midterm years, I will bring it up right now. You know, we don't have a tendency to bottom in stocks until October. So, you know, that's going to, could Bitcoin decouple from stocks if they go lower? Maybe, but that hasn't been consistent historically. Let's see what happens if price gets to these levels and where it is, you know, during these points in times. Right now, it's hard to say. Monty, do you have any thoughts about an earlier bottom projected in maybe May or
Yeah,
those other impacts?
I think you hit it on the head. I think the fact that there are still many believers in the positive price action of Bitcoin means that we still can plausibly go lower. I mean, from the chart I shared, you know, there are still people holding at the 95K, 85K, 80K level. They're hoping to be able to sell for a small profit if Bitcoin moves up to 100K. I think it's more likely that converts to sell pressure. So yeah, I think that just looking at right now, the positioning data, it's not looking too favorable with a lot of people holding at a loss and a lot less people holding at a profit. So whenever you have that happening, you know, you have the risk of continued sell pressure and kind of a cascade of negative price action occurring. I think that is something that you need to watch out for and could lead to lower prices, which is why I'm kind of waiting. Although there are this is nearly the perfect storm of sentiment, I still think sentiment can get worse, and I think it will get worse. And with that, we'll see lower prices. So just based on what I've seen from previous bear market cycles, I wouldn't want to jump the gun and rush back into things because from a sentiment perspective and from a positioning perspective, it looks to me like things can go a little bit lower.
Look, let's just talk about the classic phrase like, I never buy the bottom and I always sell too soon. We don't need to buy bottoms and sell tops to make money in markets. They're overrated. But we've harped on that point long enough. Monty, I'd like to go into some oil analysis.
Yeah, let's do it.
Okay. Because we've got quite the breakout today.
I know, we've been waiting and it's finally happening.
And still only at $66. So it's not like we're getting to higher levels like 70 or 80 yet. But what I will say is that the weekly chart continues to look good. It really is all about Iran. That's the primary driver. And clearly, as more and more military vehicles and convoys are moved into oceans closer and closer to potential conflict zones, then that price action is being reflected in oil. If there can be some type of deal or peace negotiation that's reached, then maybe we see some type of intermediate sell-off. However, I still do think the supply of crude is still somewhat restricted based on production and how rigs they've turned off a lot of their production because it hasn't been economical with oil in the 50s. So we'll see if that price, you know, comes up a little bit because of the restriction in supply. I think that's going to be something very interesting. And then also, you know, we've been talking a lot about the theme of forecasting of midterm election years. And I never, you know, put these forecasts up as absolutes, but I think it's nice to have kind of a baseline framework of what things have done in the past and identify, okay, are they repeating, and are they repeating for similar reasons? This is what we've seen in the average oil performance in midterm years going back to the 1970s. And as you can see, throughout the first basically 3/4 of the year, prices have a tendency to trend bullish. And for an asset that has very strong mean reversion, right? Oil really hasn't gone anywhere an inflation adjusted basis in the last 20, 30 years. But the first half of midterm years, it is a tendency to do really well until about the 275th day of the year. It really gives a lot back. And interestingly, this is when stocks have a historical rally during the midterm year. And that also lines up with a potential market bottom in October with Bitcoin. So when we have the confluence of all of those historic cycles in the price action, it looks pretty promising, and the tape is going up so far. We'll see how things react if geopolitical tensions are resolved, but the tape is bullish so far. Any thoughts on that, Monty, or
Yeah, I mean,
suggestions?
just setting aside all the geopolitical things for the time being, I think that your outlook for this midterm election cycle year is becoming very, very clear in the sense that we expect positive performance from oil and the dollar to start the year for about the first 250 days. And we expect to see risk assets like Bitcoin and the equity markets do the essentially the exact opposite for the same period of time. So you have this confluence between indicators where you're seeing that, in historic market cycles, in midterm election cycle years, the DXY and oil tend to do well for the first like 3/4 of the year and then give a little bit back at the end of the year. But I think that, if you're looking to make money in this market, I think that clearly the two leading options for possible positive bear market price action would be the dollar and oil. I mean, that daily chart, CJ, you talked about it yesterday. It had kind of a cup and handle forming in crude oil. And I think that today we're really kind of breaking out of that level. So, yeah, I think that whenever you have that confluence of indicators from like a macro perspective, it's worth taking note. And I think that for the time being, it's clear that you want to be in the DXY and in oil. And then once September and October come around, that's when we need to start thinking about some more risk assets. And one asset that I think has the potential to perform very well once things do turn around, and we've talked about it a lot, but I think it's still worth mentioning, is Riot. And taking a look at Riot here, it's performed a lot better than a lot of the other crypto related equities in the last month or so. And that's because it's diversified itself. So if you haven't heard, Riot leased some of their equipment to an AI company in order to make some money during this bear market and essentially use some of their computing power for the AI trade. So that diversification has led to strength, and I think it will lead to continued upside momentum as things break out here for Bitcoin. Once they do break out in September or October, I expect to see Riot as one of the top performers due to its fundamental diversification and also due to its strong relationship with Bitcoin. So, taking a look at Riot, it's sitting above its moving average right now, or right at the moving average. And then if you look at some of the other crypto related equities, most notably Mara, which is the most similar from a fundamental perspective, it is just off the lows and looking very weak, so widely diverged from its moving average. And I think you can take a lot away from these charts right now about what their future performance will look like when Bitcoin does turn around. And given the fact that Riot has managed to diversify a bit from being strictly a crypto miner to also being involved in the AI play, I think is hugely important for the valuation of this company. And I think that when we do see Bitcoin turn around, you're going to see this one really lead the charge in terms of high beta to the upside. And that's due to the fact that it's holding up relatively well. It's moving alongside Bitcoin for the most part. But on days where Bitcoin does well, it tends to do very well. On days where Bitcoin does poorly, it tends to be relatively flat. So Riot is one that I've got on my radar for the foreseeable future here. This is one that I'm going to be looking to speculate into once we hit that period of time in September or October and the DXY and oil start to turn down and equity markets start to turn up. I think I'm going to take a pretty big shot at Riot because I like their fundamental diversification and also their technical strength relative to similarly structured companies. So that's one to keep an eye on for sure.
Yeah, one thing that we were talking about in the member webinar on Tuesday is like themes of assets to accumulate and what we would like to involve ourselves in a potential sell-off event and looking for some type of equity bottom. And I think the core themes that remain, a cool trade idea that AJ had that worked quite well earlier in the week was UEC. That's a Uranium Energy Corporation. I think, clearly that's theme in general. The uranium and commodity super cycle makes sense to continue throughout, the end of maybe we see a little bit of a break. But, if we're looking at that October timeframe, things like lithium batteries, things like alternative forms of energy, things like possibly even robotics. So, and then crypto as well, namely just Bitcoin. But and Riot, I got to give credit where credit's due. But now they're kind of diversifying, and if you just look at what Cypher and Iron did after they diversified into the AI basket, that was clearly very beneficial for their stock price. So I think Riot's definitely looking at those two and trying to take a page from their books. Last thing I will say, go ahead.
You mentioned UEC and URA, you mentioned uranium in general. I would love for you to pull up those charts because I think that those are definitely ones to watch as potential outperformers to the upside. You talked yesterday during our member webinar about LIT and its performance, and I mean that looks like an incredible chart. But I would love to get your thoughts on the technicals of these assets because they can be a little bit tricky.
Yeah. Just pulling up the Mag 7 here, it is kind of interesting. We're seeing a lot of points on the 7-point trading checklist line up and still have a pretty wide divergence from that level. We'll see if they can get a bid. They've been very weak, obviously. UEC, this is what we were talking about in terms of the potential cup and handle. Not perfect, but, I think it doesn't have to be perfect, right? But if we break some type of, the time to get in on this trade was at the close of the hammer, but it's gone up about 5-6% since then. If we can break above this level and continue to trend, that would be very interesting for UEC. Going by URA, there's a couple different uranium ETFs. This one, same type of basket, right? Looks very similar to UEC. Potential cup and handle pattern forming reminds me of what happened to silver earlier on in the year. I'll bring that up very quickly. Not exactly the same thing, but general principle. Double top, kind of a cup, find support at the moving average, and then you see the continuation of the existing trend. So is that what we're seeing in uranium? We'll see. Possibly. The tape's pretty strong though, so same thing with silver. I got to say, after we've had such severe sell pressure, like silver does look like it wants to bounce at this point. We'll see if it can make a new high, but that dead cat bounce looks pretty due for silver. Couple more assets. Oh, right. The lithium battery ETF.
Yeah, that's been a great performer.
Yeah, so this is stuff I want to be in, right? It's tough to buy everything up here, especially when stocks have a tendency to sell off in late April pretty severely in the midterm election years. So I would like to wait for some type of macro sell-off, take a couple months of potential accumulation and see if prices start rebounding from those levels. Because I could rattle off these statistics all day, but it's like the average performance of the S&P in the post midterm year going back to 1925 is 15%, which is a great forward year return considering the S&P only averages like 9 or 10. So I would almost wait. Like I would rather miss out and wait for a better setup than FOMO into kind of stocks up here, because I do think they've been showing some signs of distribution. But that's lit, something that I would be interested in. URA, something I would be interested in. But we'll see. We'll see. The last thing I'll say in terms of, we've been talking about like the midterm year, going into this year, the sentiment, it reminds me, I haven't seen sentiment so strong in one direction since nearly the lows in 2022. You're always going to have perma bears in the stock market, but when you look at like the forecasts of places like Vanguard, BlackRock, Goldman Sachs, all the major banks, not a single one of them was bullish going into their forecast for 2023. And that was the low, right? We had a good year in 2023. And now every single one of those major banks has forecasted a very bullish year for the end of 2026 and a very bearish year for things like oil and the US dollar. So anytime you have that strong opposition or just opposing sentiment, something to consider, something to watch. That's what I like in terms of trading ideas, buying things that are hated, selling them when they're loved. These are simple things, but very difficult to do in practice.
Yeah. And it may seem kind of counterintuitive to take the contrarian stance, but from everything we've said from a technical perspective, it's the same with positioning data, right? If it's too much leaning to one side, then, perhaps you want to take a look at the other side because too many people are focused in one direction. I think the same is true with sentiment. Whenever it's prevailing too much in one direction, the price action tends to fight against it and go in the opposite way. So, the prevailing sentiment is that the DXY and oil won't have a good year. I think that based on what we've seen historically from midterm election cycle years and what we're seeing so far, I think that's not going to be the case this time around. So, yeah, always interesting to take that contrarian stance.
Yep. Well, if you guys would like to join us for member webinars, trade insights, weekly research reports, you can get a free 2-week trial, no risk, no credit card or anything like that at the QR code in the link below. Wonderful having you guys as always. Monty, anything else you'd like to talk about or leave us with?
No, I just want to thank everyone for attending. Like CJ said, definitely stop by at the Telegram group. If you got any questions, any assets you want us to do some technical analysis on, just drop it in the Telegram group and we'd be more than happy to answer it. But thank you to everyone that came out today and participated in today's show. We greatly appreciate it. And we'll see you again next week. Take care and happy trading.